Okay, so the market is open and it's still within the first 15 minutes. It's 9:38 Eastern right now, so still doing its choppy thing. Um, Last night I hit the target profit, or I hit the take profit, I should say, um, at 9:25 after moving it down, and of course it bounced down, never hit the 34,000 even. Um, the front band would have worked for a perfect 250 point move down to 675, where I didn't see this until, well, I didn't, I saw this, but I didn't really take it because it kind of moved down and up very, very quickly, um, a little outside of my awareness. So I didn't really get a chance to pick this up, but we do see on the 15 minute there's a bullish engulfing forming. It's not as good as if it was, let's say, something like this, a hammer candle and then a bullish engulfing. That's a lot better of a formation, but still, engulfing is still engulfing. So this might want to go back up, but it doesn't. Um, I mean, who knows? The first 15-minute candle is often a fake, so this could easily go back up, pick up some liquidity up here, and just come back down. There's also news happening, which is what this indicates. Um, there is a FOMC. No, there's Jerome Powell is speaking later today, so there's a lot of anticipation for what that could mean. And I guess this thing says, I don't know how helpful it is, but just the fact that there is something is a good reminder for me. So I appreciate the icon, but the actual headlines are, um, I take with a giant grain of salt. Uh, you know, someone that sees this might think that I should short, or that we should anticipate selling, but we really just don't know. That's just something that they're guessing, and the price action is actually much more of a reliable way of trading, especially for the way that I trade, because I don't look for these tiny little scalps, uh, where I'm in it for like a minute or two and then try and go for the super quick profits. Um, I like the way that we trade quarters, because the movement just usually just goes into the quarter. Like for example, this candle right here, I know was because of a Fed announcement, and it just hit, having a set on the 675 would have just made your day. You could have gotten well, almost two quarters out of it, right? You wouldn't have completed the second one, but you would have gotten at least a quarter out of it. And even if you got chopped up on the 750, where that's the default, you would have made up for it on the backup, and that's without even paying attention to any Fed announcement whatsoever. So the movements, it actually just helps the market move towards the quarters. It's not something that we need to like necessarily be afraid of, and that's why I like this particular strategy. So right now I'm looking for, I don't know what to expect here. It's a range inside of a range, right? Our range is between the uh, this quarter, right? Basically the three bands of the 34,000 and the three bands of the 750. So at its max, it's 675 to 3475. That's the range we're playing in right now. And right now, it made a lower high and a higher low, so it's in a range inside of a range. There isn't enough runway here for me anyway to take it to for a decent quarter profit. So right now, I mean, it's too precise. It's like 925 to 675 is exactly two. So I would have to get exactly 250. I mean, and I would have to, have gotten this perfectly and then reach this perfectly, but this could easily just not reach that, make a lower high, and then come back down to make a lower low. We don't know what's going to happen. there isn't enough runway for me to feel comfortable taking profits. So I'm not going to enter anything right now unless I pick this up and I go again exactly perfect. Right, this is the only shot that I'm taking. I don't know that I'm going to take anything at the 750 right now, um, because I don't. The risk reward isn't there for me. Like I said, the runway isn't there. So normally I'd be looking at this and being like, oh look, let me take the 750 right now, and it's not even the worst thing if you did, but I'm just being conservative. I'm already in a long. Um, if the markets move up, if the indexes move up, then I will benefit from it by being in this trade. And this thing I want to see move up all the way 75 points, which is up here. Um, this is more likely to hit. I think if the news is positive, this breaks above, makes a new high. Um, then what would likely happen is if the S&P moves up and make a new high, then the Dow would probably end up hitting the 34,000 or 3475, um, and then now I'm hedging. Now I'm hedging against myself. So I'm gonna allow that to happen because I could still stay in the S&P trade while this chops around inside the range, and it's been doing that all year. Um, so why not expect it to do it again? I haven't seen anything to make me think that it won't keep doing that. So a little bit of an indecisive morning, but I'm okay with where I'm at.